This screencast is looking at Summer 16 Question 1. Particularly, we're focused on the area of ratio analysis in the context of personal finance. So again, ratio analysis doesn't directly appear on the syllabus of CAP1 Finance, but it can form part of working capital management, forces of finance and capital structure, and it can also appear as part of personal finance, the last section in the syllabus. So in this case, we're going to look at Question 1, Part A. We're asked to prepare a memo for John Fogarty briefly recommending which company he should invest his 80,000 pension lump sum in. And in support of your recommendation to calculate earnings per share, price earnings ratio, dividend yield, and dividend cover. That's 10 marks, and note there's directly an explicit 1 mark for presentation. So we won't look at Part B, that's to do with weighted average cost of capital, which is a separate section on its own. The key point is here, you should prepare a memo. You're asked to briefly recommend, and we'll come back and see where the students fell down in terms of those regards. And also, because you're asked to calculate some ratios, it would be a good idea to skip a page, leave the first page for the memo and a nice summary table, and do the second page as an appendix, which are workings. So again, try and make sure you get the presentation mark, because it is worth 1 mark, which is valuable. So again, I've assumed you've read through the question. If not, please pause this and read fully through the question. The context is here, you have 2 companies to choose from, Techno or Swear. You're given what the profit after interest and tax is for the year, and you're given extracts in terms of their funding in their statement of financial position. So we see both companies have ordinary shares, of course, but they also have preference shares, which will be important, and they have a long-term loan each. So in that regard, we're told additional information about the preference share capital, about what retention of profits they use, and also what their return on that profit is. So you've given plenty of information there that you should know based on your knowledge of the ratios, which will be relevant for certain ratios. So we're asked to calculate 4 ratios. So what we'll do is, now this is assuming we've already skipped, and we're going to leave a little, we'll say a page here, that we'll do a nice summary table and briefly recommend to get our marks for Part A. But I'm just going to come to here, for example, the second page, appendix, and do working 1, earnings per share, EPS. So remember, in the CAP1 Finance exam, you will not be given the formula for the ratios. So you need to know what the formula are, and more importantly, what numbers or what figures you'll need to sub it in. So for earnings per share, it is profit after tax minus pref div. So it's the profit after tax minus the preference dividend. And a lot of students got caught out by that in the Summer 16 paper, that they did not take off preference dividend over the number of shares, number of ordinary shares. So for EPS, this is the earnings for ordinary shareholders, so after preference dividend is paid, and we're looking for the number of ordinary shareholders. So it's nothing to do with pref, so you'll make sure you strip that out. So that is what the formula is. So we'll do it here for Techno, and we'll do it for Swear. Just make them a small bit bigger. So for Techno, you have the profit after tax, we're told in the question, is 1.3 million. So I'll just put it in millions because we're going to be using number of shares. And the preference dividend, we're not told directly, but you needed to figure out that it's a 10% preference share capital, and there's 4 million of preference share capital. That means there's 400,000 of preference dividend to be paid each year. And we're told here the preference dividend has not been paid, so it would not have been taken out of the profits for the year. So that is one thing that caught a lot of students. You needed to know the formula was after preference dividend. And the second thing you need to be careful with now is how many ordinary shares are there in Techno. A lot of students would have written 2 million ordinary shares because they've seen that in the statement of financial position. That means they have 2 million ordinary share capital in euros. The number of shares will be dictated by how much each share is worth. If each share is only worth 25 cents, that means you have 8 million shares to get 2 million share capital, because 8 million shares at 25 cents each equals 2 million euro of share capital. So that's one student got caught out on, because the examiner tried to put in a bit more of applied Rather than just spoon feeding you the numbers you need to fill into the ratios, you had to work back and figure out what the key numbers were. In this case, you needed to figure out about the dividend, the preference dividend, and also the number of ordinary shares. So in this case, you have about 11.3 cents per share. So 0.11 is 11.3 cents per share. For swears, the same working. It's 1550 minus the preference dividend here, which is 300,000. So 3 million times 10%. And the number of ordinary shares here is, so you have here 25 cents, 2 million, or 2.2 million. So that means you have 8.8 million shares. So 8.8 million shares. That gives you an earnings per share of about 14.2 cents. So the key thing there was to understand your formula. Students got caught out by not taking off the preference dividend or by getting the wrong number of shares. Remember, this figure here is euros of share capital. You actually want the number of shares, which is dictated by what the value of each share is. So that's our working one, EPS, and we might put in a little need table here then. For example, we'll say earnings per share for Techno and Swear, and we'll say 11.3 cents, and we'll say here 14.2 cents. So it's a nice summary table, cross-reference working one, so I put a note there, and that can be very helpful for presentation marks, because you'll have to do your memo as well, and also it'll be very helpful for making a nice brief comment, because you can compare and contrast them directly on the paper. Working two then is your price earnings ratio. So your price earnings ratio, so we asked that for the second one, price earnings. That is your what's called the MPS, the market price per share, over the earnings per share. So you're actually going to be using the answer from the first one in the second ratio. So don't be too worried if you get this wrong, but you use your wrong figure in the next one, you won't be deducted twice. So you only lose the marks a single time. So in terms of looking for a market price, we're told Techno has recently issued shares at a premium of 90 cents over the nominal price. So some students got caught out here. That means the price, that the current price of Techno is 1.15. So it's €1.15 because they issued at a premium over the nominal price. They didn't issue them at 90, it was over the nominal price, so that means you add them together. So it's 115 over 0.1125, meaning the price earnings ratio is 10.2. So 10.2 times, put it there, price earning is 10.2. Typically you put an X behind it to say that's times. So for every euro, or for every, for example, cent that they have in earnings per share, the investors are willing to pay 10 times that to buy a share. So 10 times earnings is what the going rate is to buy a share in Techno. Swear is the similar approach. You're told directly here that the share price is €1.02, so you don't have to do any calculations, and it's divided by 0.142. So the price earnings ratio here is 7.2. So we'll just round 7.2 times. So it's clear here that the investors see Techno as a more attractive investment than Swear because they're willing to pay more for the earnings to buy a share in each of them. So the investors are only willing to pay 7.2 times earnings to buy a share in Swear, whereas they're willing to pay 10.2 times in Techno. And we'll cross-reference that, working 2. Working 3 then, we're asked for another ratio, is dividend yield. So again, you need to know these ratios in the exam because they will not be given to you, and it is a closed book exam. Dividend yield is the dividend, so the ordinary dividend, so not to mistake it with the preference, over the market price per share. So again, we have the market price already. We have to see, can we figure out what the dividend is for each company. And again, this is a good example of the recent examiner focus on applied style questions. They do not spoon feed you in terms of what the dividends are, they make you work it out. So in this case, you're told Techno retains 56% of its profits for future reinvestment. and it distributes the remaining profits to its shareholders. So that means what's called the payout ratio. The payout ratio must be 100% minus 56%. So for Techno, they pay out 44%, which is the full amount minus 56% to reinvest it as dividend. And we know the amount, profit after tax minus the preference div. That is 1.3 million minus 400,000. So remember, we've done that from up above in the initial working, that there is 1.3 million profits available, but 400,000 of that goes to preference dividend, which has not been paid yet. Therefore, what's available for ordinary shareholders, and that's what you're looking at here, we're always interested in ordinary shareholders, is 900,000. And the dividend then will be 44% of that, which is 396. So again, you can see the examiner here is making you work to get the figures. That's very much an exam standard question, where you're not spoon-fed the actual figures directly. You have to think and work back in the question. So the dividend yield here is the dividend, which is 396. And of course, we're not really interested in what the dividend in total is. So that's the total dividend. You can't really divide the total dividend by the market price per share. So we want the dividend per share. So that should read there, the ordinary dividend per share. Because if the market price is per share, you need to have the dividend per share. So it's 396 over 8 million shares, as we've calculated in the earnings per share calculation. We've 8 million shares, which is about 4.9 cents per share. So the formula then will be the 4.95 cents divided by the market price per share, which we are told is 1.15. So the answer for dividend yield will be in percentage terms. That means an annual income of dividend from this share will earn about 4.3%. So you can compare that to the annual income you might earn on a bank deposit, for example. Similar approach now for Swear. The profit after tax minus preference dividend is 1550 minus 300,000 of preference dividend, which has not been paid. Because we are only interested in ordinary dividends and ordinary shares. So we need to strip out any impact of the preference shares. The payout ratio here, they retain 72%. That means that's their retention ratio. So their payout ratio must be 100% minus 72%, which is 28%. So if you retain 72% of profits, which is also known as your retention ratio, you must pay out 28%. So their dividend in euros is 350,000, and they have 8.8 million shares, which means they pay a dividend of about 3.98 cents per share. Alright. So they pay around 4 cents per share, giving you a dividend yield of 0.039 divided by the share price, the market price per share, of 1.02. So remember, dividend yield is in percentage, so it's about 3.9%. So we put them in. Div yield 4.3% and 3.9%. So key thing there was you to figure out what the dividends were for the year, and then you to make sure you presented it in percentage format. The final one then, working 4, you're asked for dividend cover. Dividend cover is a measure of how sustainable the dividend payment is each year. So how much profits are there to cover the dividend payment. So in that figure it is profit after tax minus pref div over ordinary div. So again, you need to know those formulas going in, because otherwise you won't be able to do the ratio questions on the day of the exam. So it's profit after tax and pref div, which we've done over here, divided by the ordinary dividend, the full amount. So remember, you're comparing, it's nothing per share, it's the full amount of each. The total dividend is here. And that answer will be in times. So you have 900,000 of profits available to ordinary shareholders, and the total dividend paid to ordinary shareholders was 396. So in terms of cover, you earn about 2.27 times profits as a multiple of your dividend. So you have about 2 times dividends available to cover you. In the case of Swear, it's 1.25 million over 350,000. So in that case, you have even more cover. So the dividend looks a bit safer in terms of its ability to pay, because the profits for the year are 3.5 times the dividend for the year. So profits could fall a good bit before you would not be able to afford to pay a dividend. So remember, the answer here is in times. So it's dividend cover is 2.2x, 65 times, and 3.5x. And I referenced there working for. So the key point was there, firstly, you needed to know the formula because you won't be given them, and secondly, it's unlikely in an exam standard question that you will be spoon-fed all the numbers to slot in. These examiners, they like to do applied style questions, whereas you can see they try and get you to work out the number of shares. They'll see will you pick up on taking account of the preference dividend, and they'll see can you figure out how much dividends are paid, giving you the retention ratio for the year. So that's the first part, and a good chunk of the marks will be actually calculating the ratios, and I prefer to do that in a separate page, show your formulas and where it comes from, and then slot them into a nice and neat table to make your commentary afterwards. So again, when they're asked for a memo, you're essentially putting to John Fogarty from, and I might just write a accountant or something like that, and then investment opportunity. So you're just showing the examiner you've read it's a memo, you want to get the presentation mark. So of course you might put that up the front. I was thinking you should really put that up the start. You might say, dear John, please see below key ratios. And remember here, and this is an important word, briefly recommend. So when we look at the examiner's feedback in a second, some students wrote up to 2 pages on this. Briefly, I recommend that CAP1 means 2 or 3 lines at most. What the examiner wants to see is, do you understand, or can you make relevant comments to advise John on which one is more suited? So you can see here, on an earnings per share basis, Swear earns more, and it has a more sustainable dividend because the dividend cover is higher than Techno. In terms of dividend yield, i.e. how much is paid out in a dividend each year, Techno looks more attractive. And likewise, from a price-earnings ratio, Techno looks more attractive from the market perspective because people are willing to pay more for each share. So the suggested solution suggests that you should choose Techno, but it could equally be argued that you could choose Swear here. The key point is you make a couple of key points. Why would you choose Techno? Because it has a higher dividend yield, and the market clearly thinks that it's more attractive than Swear because of its higher PE ratio. On the other hand, you could argue you prefer Swear because it has a higher earnings per share, and it also has a higher dividend cover, while the dividend yield is not materially different than Techno. So it's more likely to be a safer dividend payment in the long run. So the key point is, if we go back and we look at what the examiner said, go back here. So the examiner said here there are mixed results for part A, which is the ratio question. Some students had a very clear knowledge, others really struggled. And this is the examiner's feedback directly. It's important that students have a thorough knowledge of the ratios and can discuss. A common area in financing requires better prep. Common mistake, students did not take off the preference dividend, which we talked about. But more importantly, and this is going for all CAP1 finance, you need to note what the examiner asked for. They said, briefly recommend John Fogarty. However, some candidates wrote over 2 pages. And they said such a lengthy discussion was not required here. And more importantly, is you probably did get the marks for the requirement, but you would have struggled badly in terms of timing to finish all the rest of the questions. So again, that clearly you can see here, it's very valuable that you, or it's very important, should I say, that you read the examiner feedback each year. Key things were there. Some students did not know ratios, even though it's a very common area, and the examiner has clearly said it requires better preparation. So you need to have a thorough knowledge of ratios, and also more importantly from a broader exam technique perspective, you need to be careful of not overwriting in terms of narrative parts. If they say briefly, briefly means a couple of lines at most. Otherwise, you probably will get the marks, but you're going to do yourself an injustice in terms of the ability to finish the whole paper. So remember, CAP1 Finance requires 6 full questions to be answered, so you will be very tight on time. So make sure you read the past examiner feedback and see where students are falling down at. Alright? So one of the final part, and just a more general thing, some students are losing out on basic marks here because they didn't give a memo format. So memo format, look at the suggested solution. All they do is put memo up the front, to, from and re, and a small introduction. So nothing more complicated than that. And amazingly, some students didn't even prepare the memo. So again, get those easy marks, pay attention to what the wording is in the requirement and what the marking scheme is in terms of the exam paper itself. So that question was Summer 16 question 1A, focusing on ratio analysis and a small bit about exam technique in CAP1 Finance.